Okay, let's unpack this. The headline-grabbing news is this announcement of a fresh trade framework between the U.S. and the U.K.
Yeah, and it's the first deal of its kind under the current U.S. administration. So,
Yeah.
definitely something people are watching.
Absolutely. So our goal for you today is pretty simple, just to distill what this framework actually involves and, well, what the potential ripple effects could be.
Exactly. And what's kind of fascinating here is we're seeing a concrete step, after a period of more, let's say, general talk on trade.
Right.
This initial framework, it gives us some interesting clues about the administration's current thinking.
Okay, so let's dive into the specifics then. What the U.S. hopes to send more of to the U.K. We're hearing about a $5 billion target for American goods heading east.
That's the number being floated.
What kind of products are we talking about specifically?
Well, the framework really highlights several key areas. Agriculture is a big one. There's a focus on getting more American beef into the UK market.
Which has been a sticking point before, right?
All for a long time, yeah. So beef is there. We're also looking at increased exports of things like ethanol, animal feed, and various categories of machinery.
Okay, so a mix, ag and industrial stuff.
A blend, exactly. Agricultural and industrial ambitions.
And what about the flow in the other direction? Goods coming from the UK into the US. What's the tariff situation look like there? I know there's sort of a standard tariff in place already.
Precisely. There's a general 10% tariff that applies to, well, most goods entering the U.S. But, and this is important, this framework carves out some notable exceptions.
Like what?
For example, engines and other parts for airplanes, specifically from Rolls-Royce, they'll be entering the U.S. completely tariff-free.
Ah, okay. So that's a clear win for that specific sector, aerospace.
Definitely.
Interesting. Now, cars are always a huge topic in trade talks, especially between, developed economies like these. What's the deal with UK car imports?
Right. So for cars made in the UK, the framework sets up a kind of two-tiered system. The first 100,000 vehicles imported each year, they get hit with that 10% tariff.
Okay.
Now, this is key for some manufacturers. This could actually be a reduction from the tariffs they might be facing currently.
Okay. But only the first 100,000. What happens after that?
Any UK car imports over that 100,000 mark get hit with a much steeper 25% tariff.
Wow. Okay, that's a significant jump after that threshold. Now, shifting gears a bit, steel and aluminum, they've been right at the front of global trade discussions lately. How are they handled here?
Yeah, this is where things get really interesting. The UK is going to align with the US. They'll both impose a 25% tariff on steel and aluminum imports coming from other countries.
Okay.
But, and this is a key part of it, the US and the UK are essentially creating a special free trade zone just for these two metals, just between themselves.
Ah, I see. So tariff-free trade between the U.S. and UK for steel and aluminum.
Exactly. So while they're both putting up barriers against imports from elsewhere, the trade between them in these metals will flow freely, no tariffs.
Okay, so a kind of coordinated approach. Protecting their own industries maybe, but facilitating trade between themselves. What about pharmaceuticals? That's another big one usually.
Yeah, the framework is pretty clear on this point. Pharmaceuticals traded between the US and the UK will be exempt from tariffs. Straightforward.
No tariffs on pharma. Okay, let's maybe take a step back for a moment, get some context. How big a deal is the UK as a trading partner for the US, really?
Well, in the grand scheme, the UK accounts for roughly 4% of total US exports. That makes it America's 9th largest trading partner overall.
Ninth largest, okay.
And crucially, the US currently runs a trade surplus with the UK.
Meaning they buy more from us than we buy from them?
Correct. The UK purchases more goods from the US than vice versa. And sometimes, having that existing surplus can make trade negotiations just a little bit smoother.
Makes sense.
And it's also worth remembering, these are the headlines, the framework announcement. The finer details are still being hammered out. We'll see those in the coming weeks.
Right, the nitty-gritty is still to come. So this announcement, it certainly caused a stir, didn't it? At least if you look at the U.S. stock markets. What happened there?
Oh, yeah, we saw a pretty broadly positive response. Across the major indices, the Dow, the S&P 500, the NASDAQ, they all saw gains on the day.
Okay.
There was a really clear shift towards what investors call risk-on sentiment. You saw stocks rally, even Bitcoin rallied.
And the flip side, safe havens.
Exactly. Assets typically seen as safe havens, like gold and U.S. government bonds, they saw declines.
Right, and the yield on the 10-year Treasury note went up. Price of gold fell. That's usually a pretty clear sign of market optimism, right? At least short term.
Textbook optimism, yeah. And the president even came out and encouraged people to invest in stocks, which is quite direct.
Yeah, you don't always hear that.
No. And we also saw CNN's Fear and Greed Index jump pretty significantly, landing in greed territory. Highest it's been in quite some time, actually, since early December. Plus, the U.S. dollar index strengthened. That rise in the 10-year yield, it suggests investors are moving out of safer government bonds, maybe feeling more confident about the economy, possibly spurred by this trade news.
And the stronger dollar, what does that mean?
Well, it can have varied effects, but in this immediate reaction, it seems the market took it as another positive sign.
Okay, so the market liked the sound of it. What are the initial thoughts from experts, analysts looking at this U.S.-UK development? What are the main takeaways?
Well, one primary observation is just that the market seemed happy to see an agreement. Even if the specifics are still being worked out, just the fact that a deal was announced.
The headline itself was good news.
Pretty much. And the fact that, as we said, the UK is a relatively smaller trading partner for the US, and one where the US already has that surplus, that likely made this an easier, maybe a more attainable first deal to strike.
Lower stakes, perhaps.
Could be. There's also a feeling that this 10% baseline tariff, the one that applies generally, that might become a kind of standard feature we see in future U.S. trade agreements. Something to watch.
Setting a precedent, maybe?
Potentially. And finally, a lot of people think this positive headline is just helping the stock market's recent recovery, giving it a bit of a boost, even while there are still questions about exactly how the mechanics of this framework will work and what comes next.
Now, speaking of mechanics, one particular detail really jumped out at me, and others, I think. The specific treatment of what they're calling super luxury cars. Can you tell us more about that?
Yes, this is a really interesting, very specific part of the framework. It explicitly calls out lower tariffs for brands like Rolls-Royce, Bentley, Jaguar.
Really high-end stuff.
Exactly. And the rationale given, as highlighted by officials, is basically that these cars aren't built in the U.S., they're seen as very specialized products, and they're made in pretty limited numbers.
Okay.
So, as we discussed earlier, that lower 10% tariff applies to the first 100,000 UK vehicle imports a year. That will definitely benefit these high-end brands, and others too, Land Rover, Aston Martin, potentially.
It just seems quite notable, doesn't it, when the general focus in politics is often framed around, making things more affordable for everyday Americans. Here we have this specific carve-out that seems designed to potentially lower the import cost of these incredibly expensive niche vehicles.
Yeah, that's a really key point some observers are making. While broad trade deals often aim to help the average consumer through lower prices, generally, this particular provision, it does seem quite targeted at a very different, very wealthy segment of the market.
Was anything else singled out like this, like regular consumer goods?
It's striking that, no, not really. No other category of consumer goods seems to have received this kind of specific preferential tariff treatment in the announced framework.
And just for context, how many cars are we actually talking about?
Well, the UK exported around 90,000 cars to the US last year. So volume-wise, it's under that 100,000 threshold. Is only about 1% of all the cars imported into the U.S. by volume.
Only 1%.
But the average value of those UK-made cars is, as you'd expect, quite high.
Right. So to kind of bring it all together for everyone listening, we've got this new U.S.-UK trade framework announcement, first of its kind for this administration.
Yep. Aiming to boost U.S. farm and factory exports to the U.K.
While keeping a general 10% tariff on most UK goods coming here, but with big exceptions, right? Like those airplane parts and this tiered system for cars, with that special attention paid to the super luxury brands.
And then there's steel and aluminum, the joint 25% tariff on outside imports, but zero tariffs between the U.S. and U.K. themselves. And pharmaceuticals are totally exempt.
And the initial market reaction was definitely positive, mostly just happy to see a deal, it seems, even though experts point out the UK's relative market size and that 10% baseline tariff is still there.
Which really leaves you with an interesting question to think about. What does this very specific focus on luxury goods, sitting alongside the broader trade goals, actually tell us? What might it signal about the priorities, maybe the direction of future U.S. trade policy? Is this a one-off or a sign of things to come?